and welcome to The Chart Show. I'm Victoria Scholar, and each week I'll be sharing my analysis on three key stories that are getting a lot of interest among investors, breaking them down not just from a fundamental perspective but with technical analysis on the charts as well. This week's three charts are Shell, Flutter and Bitcoin. After the market closed on Monday night, oil giant Shell said it plans to sever ties with the Russian energy giant Gazprom amid the Ukraine crisis. Its CEO Ben van Beurden said it was a senseless act of military aggression which threatens European security. Responding to Shell's decision, the business secretary Kwasi Kwarteng said there's now a strong moral imperative on British companies to isolate Russia. And this Shell news followed a similar decision from its rival BP, which dropped its near 20% stake in the Russian oil company Rosneft at a potential cost of $25 billion. Clearly, British businesses are distancing themselves from Russia, which will cause pain on the Russian side, but it will also create impairment charges to these companies. It's likely to cost Shell around $3 billion. Some of that pain, however, is being offset by the sharp rally that we're seeing in oil prices, with Brent crude breaking above $110 a barrel. Let's take a look now at the chart of Shell, because it's rallied by more than 40% over the last 12 months, with gains accelerating in 2022. There's a clear ascending trend line with higher highs and higher lows since the trough in December. Although Shell has come off the February highs, it's not posted a lower low, so the uptrend remains intact. It looks like 2083, the 2022 peak, is the next level to watch, with a break above potentially paving the way for further gains. Meanwhile, look for round number support at around 19, and below that 1815, which was the high from October, which has now become critical support on the way down if we continue to see an extension of short-term declines. Shares in Flutter slumped on Tuesday after full-year earnings fell by 11% year-on-year to £1.25 billion. Investors shrugged off a 113% surge in revenues thanks to the Super Bowl. With COVID lockdowns and restrictions easing off, the world's online leading betting firms struggled, with earnings falling versus 2020 at the height of the pandemic. The company downgraded its earnings outlook back in November on the back of increased spending on measures to curb gambling addiction, and also on the back of some regulatory changes as well. In the US, it made a £243 million loss, which it's hoping to turn into a profit next year for the first time. Let's take a look at the chart now of Flutter, because over the last 12 months, the stock has shed about 45% of its value, including the sharp 12% slump on Tuesday. There's a clear descending trend line in play over the last year, with losses accelerating in the months between September to October of last year. Interestingly, price has now broken below the psychological round number support at £100, which roughly coincides with the 61.8% Fibonacci retracement support level as well. Arguably, that paves the way for an extension of the downtrend and a move towards 90 as the next round number level to watch. However, there's still a long way to go to retest the lows from March of 2020 at the height of the pandemic-driven sell-off in markets. Cryptos have been a standout winner this week, with stable coins like Bitcoin and Ether surging by double-digit percentages on Tuesday. While the West is imposing sanctions against Russia and its central bank, cryptos are decentralized, operating outside of the traditional system, so arguably could be used by Russians to evade some sanctions and economic restrictions. The Russian ruble has plummeted, as well as Ukraine's currency, and part of that trade has been driven by people exchanging those currencies to buy cryptos instead. In response, the US administration is reportedly looking at potential sanctions targeting cryptos directly. Let's check in now on the chart of Bitcoin, because the cryptocurrency enjoyed a major upswing between July and November of last year. However, since that peak, a descending trend line has emerged, retracing the majority of those gains. This year, Bitcoin has been attempting to regain ground, but it's been struggling with the volatility, with big swings for the crypto complex in both directions intraday. This week saw a bullish breakout with Bitcoin close to testing the 2022 high, and the next major resistance level to watch is around 45,750, with a break above potentially paving the way for further gains, with the next significant resistance level to watch at 50,000.